Ethereum is heating up in a big way. In 2025, ETH has surged more than 40% in just a few weeks, leaving even Bitcoin in its shadow. Traders are buzzing, institutions are quietly buying, and headlines are starting to sound like the early days of the last bull run. But here's the real story. This surge isn't just another pump driven by hype, it's being powered by deeper forces: staking, tokenization, regulation, and adoption that are reshaping how money moves around the world. And if you've heard about the new US law called the Genius Act, or noticed that almost every stablecoin runs on Ethereum, then you'll understand why this momentum really matters. Now, before we go any further, nothing in this video is financial advice, and if you want financial advice, you should seek a suitably licensed professional, because at the end of the day, this video is for entertainment purposes only. So now back to the video. So what's happening now? Ethereum's price has jumped more than 40%, closing in on levels we haven't seen since its last peak. The difference this time? Institutions are leading the charge. Ethereum is no longer seen as a speculative side project next to Bitcoin, it's being treated as a core financial infrastructure. And there are three big reasons: clear regulation, proven reliability, and the fact that Ethereum has quietly become the backbone for stablecoins and tokenized assets worldwide. So what are the drivers behind Ethereum's surge? So number one, staking and supply shock. So let's start with staking. Since Ethereum moved to proof of stake, holders can lock up ETH and earn yield while helping secure the network. Today, more than 30 million ETH is staked, over a quarter of the entire supply. That's ETH that isn't on exchanges, creating a supply squeeze. As demand rises, basic economics takes over. Less supply, higher prices. Next, tokenization. This is where real-world assets like real estate, bonds, or even funds are represented digitally on a blockchain. BlackRock is already piloting tokenized money market funds, and JP Morgan has tested tokenized bonds. Almost all of these projects are running on Ethereum. Analysts project trillions of dollars in tokenized assets by 2030. And if that plays out, Ethereum isn't just a cryptocurrency, it's the infrastructure for global markets. This brings us to regulation. For years, US policy was a cloud hanging over crypto. Nobody knew if stablecoins would be outlawed or if Ethereum might be classified as a security. That uncertainty kept institutions away. But in 2025, the US passed the Genius Act, a landmark piece of legislation for digital assets. It requires stablecoins to be backed one-to-one with real reserves, mandates regular audits, and sets clear federal oversight. Why does this matter for Ethereum? Because most of the world's stablecoins, USDC, USDT, and others, run on Ethereum. With regulation in place, those stablecoins are now seen as safer and more legitimate. That in turn strengthens Ethereum's role as the settlement layer for billions of dollars in daily transactions. Institutions love clarity, and the Genius Act finally gave them the green light. In fact, stablecoins are one of Ethereum's secret weapons. Right now, the majority of dollar-backed stablecoins worth hundreds of billions are issued and transacted on Ethereum. That's good for Ethereum because every stablecoin transfer uses ETH as gas. It locks Ethereum in as the plumbing of the digital dollar. There is a flip side though. If Ethereum becomes too reliant on stablecoins, it ties its fortunes to US dollar policy and regulation. But for now, the benefits are huge. Stablecoins make Ethereum useful for payments, for DeFi, and for institutions that want dollar exposure on chain. And here's something people often overlook. Ethereum has had zero downtime since it launched in 2015. It has never gone offline, and in the world of crypto, that's incredibly rare. Solana, for example, has faced multiple outages. Institutions value reliability above all else. When billions are moving across the network, downtime isn't just an inconvenience, it's catastrophic. Ethereum's flawless uptime is one of the key reasons big players are choosing it as their foundation. Now, before we go any further, I want to mention Seeking Alpha, which is a tool I personally think is great for researching stocks and crypto and keeping up with all the latest news. They were kind enough to give me a free membership to their site, And they haven't paid me to promote them, but I do have an affiliate link in the description below. So if any of you sign up for the paid membership, then I will get a kickback. If you haven't used their site before, then they have lots of great features for analysis, many of which are very visual and easy to digest. So I recommend you going to check them out. And if you use my link in the description below, then you can get a $30 discount off of your first year. So I recommend checking them out after this video. So now back to the video. All of these drivers, staking, tokenization, regulation, stablecoins, and reliability combine to create a new narrative for Ethereum. For years, Bitcoin was the safe play, digital gold, a hedge against inflation. Ethereum was considered riskier, experimental, but now Ethereum is emerging as the financial operating system for the digital age. Think about it. If Bitcoin is the vault where you store your wealth, Ethereum is the settlement network where everything happens. Payments, lending, trading, gaming, even governments issuing debt. That's why this price surge matters. It's a reflection of real-world adoption, not just speculative hype. Of course, risks remain. Scalability is still a challenge. Yes, layer 2 networks like Arbitrum and Optimism are making fees cheaper. But Ethereum must keep innovating to handle global scale adoption. Competition is fierce. Solana, Avalanche, and new blockchains are competing with lower fees and faster speeds. Regulation, while friendly today, can shift with politics tomorrow. And of course, the market itself can overheat. A 40% rally in weeks is exciting, but corrections are natural and even healthy. The question is whether this time buyers step in quickly, keeping momentum alive. So here's the bottom line. Ethereum's 2025 surge isn't just a rally, it's a reflection of structural change. The Genius Act gave regulators and institutions the clarity they wanted. Staking has reduced supply and boosted demand. Stablecoins, most of which run on Ethereum, have made it the backbone of the digital dollar. And with zero downtime in nearly a decade of operation, Ethereum has proven it's the reliable foundation institutions can actually trust. That combination of reliability, regulation, and adoption is why this momentum matters. If it continues, 2025 could be remembered as the year Ethereum cemented itself as the financial infrastructure of the future. But what do you think? Will Ethereum hit a new all-time high this year, or is the market getting ahead of itself? Drop your predictions in the comments below, hit the like button if you got any value from this video, and don't forget to subscribe and hit the notification bell for more deep dives into crypto and finance. Also, one of Ethereum's selling points is that it can use smart contracts. And if you don't know what a smart contract is, you may want to check out this video next. It's been Ollie from Get Geek Finance. Thanks for watching, and I'll catch you in the next one.